Okay, here we go. Good evening, everyone. Welcome to the Calgary Real Estate Wealth Investment Forum. Tonight, we have why Calgary real estate will continue to appreciate in 2025. Very relevant topic, considering we just had a federal election yesterday, and it didn't go the way most Albertans wanted it to go. But does that really matter? We'll get into that in the seminar, and we'll see, where Calgary's headed.
And Tim, what's funny about the elections is it always happens. We see this. Tim and I have been realtors for 16 years. And Tim, you normally get like a month before an election, and it could be even an election down in the States as well. It's not just Canada. The market slows down.
Yeah.
I don't know what happens. It just slows down. People just sit on the fence and they just wait. And I guess there's no need to rush to get in. So we love having elections because we actually get our clients buying houses. We've been busy. There's been less multiple offers, which we're going to talk about soon, but we actually like when there's a little bit of uncertainty going on.
Yeah, it's beneficial for investors.
It's definitely beneficial. So keep that for sure in mind.
Okay, so why Calgary real estate will continue to appreciate in 2025. As mentioned, we just went through a federal election. We have a different prime minister, but guess what? Calgary is uniquely positioned to benefit real estate investors through 2025 and 2026. And we're going to go through a lot of the points, the economic points that we feel are going to help real estate investors over the course of the next few years.
Yeah, I mean, it's been exciting times for us, Tim. We're seeing supply levels come back. There's a lot of growth in the city, a lot of people moving here.
We're going to go over a number of economic factors and why we think Calgary will continue to appreciate. It's not just because we're resource-based. There's a lot of things that are going on in Calgary right now that are very, very positive, and that positive factors will trickle down to real estate investors.
Yeah, and Tim and I really wanted to put this on. We had the elections last night, Tim, and there's been uncertainty, and we're just explaining in our crew tip of the week at the beginning that when elections happen, it doesn't matter if there's elections in the States or in Canada. Typically what happens is the market cools down, and it cools down for a reason. People will just sit on the fence. And as investors, we have to tell you that is the best time to get in. We've, in the last 6 weeks to 2 months, Tim, we've bought some great properties. We haven't had to go into as many competing offers. And so, you know what, it is when there's uncertainty like that, even something as like an election, investors can take advantage of that.
Yeah, so we're going to talk a little bit about the GDP in Calgary. We're going to talk about population, investments in the energy sector, how Calgary's economy is becoming more diversified. But there are a few challenges out there that will affect our market. And already are affecting our market a little bit. We'll talk about that, just touch on it a little bit. But to start off, we're going to talk about population growth. Calgary's population is expected to grow 2.8% in 2025. Canada as a whole is projected to grow by only 2%. So we're already ahead of the rest of Canada. What we mentioned about new home buyers coming in and keeping the rents at a stable level. Like we mentioned, they're down from their peak, the rental rate, the average rental rate, but they're staying stable and not really dropping the way they are in some of the smaller centers and the way they are in the condo market in Toronto or the condo market in Vancouver. There are landlords out there that are struggling to cover their costs because the cost to get into those condos in downtown Vancouver or Toronto is very high, but the rental rates are just plummeting. So they're not cash flowing at all.
No, exactly. We see them struggling out there. But just a pro tip for you investors, Tim and I always say this: be on top of the game. So what we're talking about here is about a year ago, we were at peak rents, right? About a year. So a year ago, people were signing at peak rental rates. So when you sign someone at a peak rental rate, what the tenant does is they get on rent fast and they start looking around. Okay, so if the tenant's good, you want to get in there and renegotiate. You actually, I mean, some tenants, Tim, will just keep paying, right? We've seen that.
Yeah.
But if the tenant decides to go, they're gone because they'll just keep looking until something better comes up, and then they got the urge and then they go. So you want to have just those open discussions and saying, hey, what are you thinking? And then they'll tell you what they're thinking. And if you can go on Rentfaster and see a similar property, you can get the same thing for like $200-300 less, and it's a good tenant. We would rather renegotiate with that tenant than try and put a new one in. So that's just a pro tip there. you have to run it like a business. You have to understand what's going on. And we go through these ups and downs. That's why when when the rental rates were going up, you can go on our YouTube channel. We had advice out there not to raise the rents like crazy.
Yeah.
Right? You could actually go back and see that just a year ago. We were saying don't gouge tenants because you'll mess it up in the long run.
Yeah, and we've seen that with people who didn't take our advice. Guess what?
Yeah.
Those tenants are gone.
Gone.
Yeah. And then they had to struggle trying to rent it. And anyways, that's a discussion for another time. The next thing we're going to talk about that really, really works in Calgary's favor is the energy sector investments. Now, while we're not seeing any, new oil sands plays being developed, these long-term projects that companies invest billions and billions and billions and open up a brand new oil sands mine. What we are talking about is, smaller production levels, natural gas. Since the LNG plant in BC is open, guess what? Guess where they're getting a lot of the gas from? Alberta. And Calgary is the head office center for the energy sector in Canada. So there is that trickle down economic effect when we produce and sell more energy. Another thing is hydrogen, which Premier Daniel Smith is really, really pushing. We'll see how that develops over the years. And petrochemical facilities. There's, plastics plants and things popping up all over. If you go up northeast of Edmonton, up Greater Alley, up towards Fort Saskatchewan there, guess what? There's huge activity going on there. Mm-hmm. So like we said in the opener, our energy is not going anywhere. Our oil is not going anywhere. Alberta or Canada as a whole, depending on who you talk to, is either the fourth, fifth, or sixth largest oil producer in the world. Mm-hmm. We're still a major, major player. Yes, we need to diversify, but we'll see. We do have that one pipeline, Trans Mountain to Burnaby. We've got the LNG pipeline to Kitimat in central northern BC. Whether we go east, we'll see. We still export a bucket load to the States, whether it's by train, whether it's by pipeline. Yeah. And we do export to Eastern Canada. It goes down through pipeline through the States and then back up to Ontario and Quebec. So we are exporting a lot. There's a lot of money going into, the maintenance and upkeep of these pipelines and transmission facilities. And also there's green energy. Yeah. If you've driven anywhere around Calgary, you've seen solar panel fields popping up everywhere. In the southeast in particular, in southern Alberta, there's massive amounts of plans for solar fields to be put up. Windmills, we don't even have to talk about. There's so many going up in Alberta. We are positioned to remain an energy power for years and years and years to come.
Yeah, and what I loved about the whole elections is that the everyday person out in Quebec or Ontario, even Manitoba, in New Brunswick, you hear the people out there. That I remember hearing from the Premier of New Brunswick, his biggest fear was what's going to happen to Alberta Energy when the tariff thing happened, right? And so what this whole election has done is put a focus back on Alberta, which is awesome. I remember a few years ago, I was at the lake, it was in Ontario, and I got into this green tiff with a family member, well, oil's dirty and everything like that. And the family member was from Manitoba. And I remember just saying, well, I think you guys are taking like $7 billion from Alberta every year to fix your roads. So you can't argue with me. You can't take it and then argue with me that you need to fix your roads. So you know what? All I'm trying to say is that this focus has now, shifted, and the whole country knows where the economy is really run from, right?
Yeah, and if we want energy security, we need to look a little further than just having each province generating their own power source, whether it's hydro, whether it's wind, whether it's oil. We need to take a sort of a national approach to it. And Carney has promised that he's going to look at that. Okay. So, we'll take him at his word. We'll see what happens in the next few years.
He has to or get the boot. So yeah. Maybe we'll see.
Okay, the next thing is economic diversification. The number one thing that we talk about a lot when we're driving around the city is if you go in the Northeast and you look at the massive amount of warehouse space and rail connectivity, and it's connected to the airport, Calgary is becoming a distribution hub. Mm-hmm. And it's because our airport is, kind of central when you're talking Europe, Asia, and North America, we have a great rail network connecting all parts of North America and trucking. We're very close to the U.S. border, so economic diversification, whether it's logistics, whether it's aerospace, we've got what is it, Bombardier?
I forget the name.
Anyways, we've got an airplane manufacturer coming in. Life sciences, we have massive hospitals. The cancer center just opened in Calgary. There's all kinds of research going on there. So there is a lot of economic diversification in Alberta. A lot more than there were even 10 years ago.
Yeah, I heard just up the road, QE2, there's a hub for the tech and what do you call it, where they house all the data. There's a massive plant going in, and like a $1 billion plant or something like that.
Yeah, server farms and things like that. Yeah. And it's always been an argument in Alberta that, we're all just dependent on oil. There's nothing else going on. Well, guess what? Over the years, more and more industries, more and more companies have been coming in because we have a positive tax environment here. It's very easy to do business in Alberta as compared to some of the other jurisdictions. So guess what? That's contributing to the growth of Calgary, and it's going to help residential real estate investors out there because guess what? All the workers that are coming in, they need to be housed somewhere. Yeah. So economic diversification is a big one to watch moving forward. Next one we're going to move on to is infrastructure and trade. Infrastructure, we've been talking about the Green Line forever. Well, guess what? It's actually being built. It's maybe not going to be built like it was supposed to be built, but they are working on it. It's a huge, huge investment. Various engineering firms have to be in there, construction firms. We're importing all kinds of steel for the rails and the stations. It's massive. It's been a big project. It's going to be a big project for years and years to come. We're also have our premier touting high-speed rail between Calgary and Edmonton. That's another one that's going to be helping our infrastructure. Trade, like I said, we're a massive distribution spot, well situated, so that various companies will come in and here we go, the Western Canada Data Center. Jesse just put it in the comments there. Thanks, Jesse. And Amazon, it has warehouses.
Yeah, it's massive here. You guys should drive down and check that out. The other thing is, and I'll talk about it because everybody knows Calgary, Tim and I love the Calgary Flames. They're finally getting a new home, but it's not just about the arena. It's what's being built around the arena. You see these massive projects. If you've been out to see the nation where they're building and
the Azad development.
The Azad development. I mean, one of our investors is working on that, and it's absolutely massive. And what that does for communities around the Azad development, like Braeside or Cedar Brae or even Lakeview. I mean, that's already expensive, but anywhere on that side of the city, they're going to benefit from that as well. So you see these things like the new home for the Calgary Flames. Well, that's a massive new whole area that's just going to take off, right? And an area like Inglewood that has been suppressed for a while is already starting to turn around. You're getting trendier restaurants in there. You're getting more microbreweries, right? The younger kids like to be down that way because if they're studying downtown at the university campuses downtown, they could ride a bike there, right? So they don't need a car. These young people don't need cars. So you got to keep an eye on all of this infrastructure and see what's going on and invest in spillover communities adjacent to this infrastructure. We love doing this. Like, as we said, we picked up a property in Ogden this week. We know the Green Line. This property's up on the hill in Ogden. You can walk down the hill to the new Green Line, or you can walk across to the ravine and walk along the river on the other side. So it's a win-win for our clients down the road.
Yeah, and when we talk about these infrastructure developments, as I mentioned, the new arena, well, if you look at the development plans around the new arena, there's all kinds of condo buildings, hotels, restaurants, things that are going to be built around that arena. It'll be similar to Edmonton's Ice District when they built their new arena. It was only 8 years ago, and now there's all kinds of development around there. Yeah. There's going to be building out around that arena at Edmonton for 25 years. Same thing with Calgary. There's so much land out there that used to be the East Village, Victoria Park. It's just waiting to be developed. On the west side of downtown, you'll notice the dealerships that were there, the car dealerships, guess what? They're gone. They're going to the Tesla development, but that's going to become the West Village where the old bus station is. There's massive amounts of land there, and that's going to be condos, hotels, ground level retail. It's going to be another massive development.
Yeah.
And once, I think there's only a Mercedes dealership left there. Once
On that
that's
corner.
gone, then guess what? Development's going to start right away.
Yeah, and even the Staples in the corner across from the Ford dealership, that's already been sold out. So you're right, Tim. All of that land's spoken for. You've got the C train up on the bridge there. They'll tie that in. And it's going to be another area to watch out. So you see places like Sonalta where you can get, Tim, 2-bedroom condos for like $330,000 or less. That's on the high end in there. Well, that's only going to go upwards. And if that's your budget as an investor, it's not a bad place to start, like places like that, right?
Yeah, because when they do put these new towers in that West Village by that bus station there, guess what? They're going to be very, very expensive units. It's not dissimilar to units in the East Village where you can buy a 1,000 square foot, 2-bedroom, 2-bath unit in one of the newer developments, and you're looking at $650,000, $750,000, $850,000. Those are going to be the prices over in the west side of downtown as well. And those little units in Sonalta, when you can get them for $500,000 less, renovate them to look like the same inside, guess what? People are going to want to rent there because the rent will be a lot less than the $750,000.
100%.
Yeah, and one more thing about infrastructure. When we finally do complete infrastructure like the ring road, guess what that does? It opens up investment opportunities for our investors. We weren't looking a lot at places like Somerset or Bridlewood or Evergreen or even Woodbine and Woodlands. But when that ring road opened up and it provided access all around town for people who live there, guess what? Those communities became more desirable for rental properties, and we're starting to put our investors in places like Somerset, like Evergreen, Woodbine, Woodlands, Braeside, and Cedar Brae. Those communities are starting to demand rents that are equivalent to more inner city communities.
Yeah, that's what we like. And if you're walking distance to a C train, it's even easier, right?
Yeah.
You can save money on vehicles and stuff like that. And people do look at it. We bought a couple who moved down from Fort Mac. We bought them a place in Minnepore for, Tim, it was expensive, that one. It was like $660 or something, right? And it was just a standard home in Minnepore, but they bought it because the husband could walk to the C train and go to he works for one of the big oil companies here downtown. So and that was a driving factor for them, and we just couldn't believe it. And so a place like Minnepore or you said Somerset already, but Sundance is the one I'm thinking about as well. These older, they're not that old, like 40
years old.
Or 40, 40. Some of these communities are now more appealing. They're coming back in trend, and prices are going up just because they're serviceable by transportation, major roads, or a C train.
And all the shopping is there. All the schools are being built out. There's high schools way down there now. Whereas 10 years ago, if you were south of the ring road, south of 22X in Walden or Legacy, Chaparral, things like that, they didn't have the schools built, but the schools are being built there. The provinces sort of put a kick on building these schools quickly because there's so many kids down there now. The population has grown so much. Once the schools are in, the shopping's in, it's more desirable. It's not like the newer areas where we try to keep people away from to start, like Pine Creek, Belmont. We've got investors down there that are having a challenge renting out their units.
Don't buy brand new. Do not do that right now. Not for another year. At least, Tim. Maybe 2 years. Stay away from brand new. If you need to know why, that's a whole nother seminar. It's just not worth it. But just getting back to these schools, one of my kids was playing flag football today down in a place called, I just had to look at it, St. James it's called. This is the school, St. James. My son goes to St. Greg's, which is just on the west side here, one of my kids. And he's like, Dad, can you come down and watch? And we were all over the place today. And I'm like, no, that's 35 minutes away. 35 minutes away. But I did go to the school for badminton, Tim, and these new schools, they are unbelievable how they're built. Brand new facilities, top-notch sports facilities. So I could see why families want to live down there. But renters that just get here, it's not working out in some of those new communities
Yeah,
right now.
and the massive amount of new builds, the way the developers are building them, side by sides with legal suites. So you've got 4 units on a 40 foot lot. Maybe have a garage in the back, maybe not. There's nowhere to park. And there's 100 other units exactly the same. There's nothing to differentiate your unit from someone else's. So unless you got in very early and you got in at a lower price, it's going to be tough to cash flow in those newer areas right now.
Yeah.
Okay, with all these factors that we're looking at, there are also some challenges. And the number one challenge we're seeing right now affecting real estate in Calgary is, guess what? It's the geopolitical uncertainty. And the number one uncertainty comes from that guy right there on the screen, and the tariffs. So far we've been spared the majority of the tariffs here in Western Canada and Calgary. But now that we do have a new prime minister and Trump has said he's going to have a chat with him, that we'll have a little negotiation, we will see what happens. And if any new tariffs are put in, if they're large, if they affect the oil industry, if they affect Western Canada's economy, we'll have to see. Those things are always going to be there. Whether it's Trump, whether it's China, whether it's, Mexico, we're always going to have challenges geopolitically. And as real estate investors, we have to roll with the punches.
Yeah.
Right? If oil gets hit with a tariff and we're exporting a little less, the price goes down. We have to be able to roll with the punches, adjust our rental rate, adjust our portfolio as a whole. You may have to lower the rental rate on one property and keep another one the same. That's what we're here for. Clients come to us all the time asking, should I sell this condo because it's not cash flowing anymore? We will actually go into that property, look at it market-wise, see how it's positioned in the rental market, see how it's positioned in the sale market, and we'll be able to advise the clients that way.
Yeah, and okay, so a few things on the tariffs. There's already massive plants out east closing down. Like I was reading the other day, one plant, I think it was Jeep Cherokee, they were coming out with some sort of electric version of their vehicle and they just shut the whole plant down. So where do those people go? We honestly feel that Calgary, with this population shift that's been going on, not just now, Tim, it's been going on for a year and 4 months or a year and a half. We feel what's going to happen is there's going to be more net migration and people are going to move here and it's going to fuel, and it's not the first time it's happened. So we need to stress this. Tim and I have lived through this. We've lived through, we used to call it Canada's national bird, which was a crane on top of a building, because at one stage in 2006, I think we counted something like 32 cranes. That's how many buildings were going up at once. I don't know if that's ever going to happen again, but
they're coming back.
They're coming back. They're coming back. And it's not going to be commercial space. So we know that. It's going to be residential, okay? Mainly, we would say. But Calgary, it's going to turn and it's going to benefit from all this. First, Alberta's already looking for other buyers for their oil. So just that alone, and their natural gas, right? So just that alone is going to spur on more activity no matter what. And secondly, with people unfortunately losing jobs out east, they're going to be looking out west for opportunity, and Calgary will be able to provide that in a different form and more in the construction form. And construction brings on huge amounts of jobs. And if you listen to Carney last night, one thing I did like that I heard from him is that the materials that he wants to go through a building boom. So he wants the country to go through a building boom, but he wants this, and he wants to use materials within Canada. Now, that might not just be in Calgary, but it might be BC lumber or whatever it is. But guess what? It's coming here. You need workers, and I think it's going to fuel all of it. So I'm actually, for the next 5, 10, 15 years now, like I'm feeling very positive for the city we live in and very excited to see the landscape once again change. I mean, we're sitting on empty lots, parking lots downtown that have been ripe for development for 20 years, Tim, like 20 years plus. And we know developers are just sitting, waiting. And so what's going to happen with interest rates that are coming down or they've come down? the developers are coming back into the game because it's cheaper to borrow. There's more positive in within Calgary, and you'll see more development now.
And there's more economic incentives from various levels of government. If you're building a purpose-built rental property, you get incentives from provincial government and you get incentives from the federal government. I believe it's a GST break if it's rental purpose building. So there are benefits for developers going on right now. And like I said, there are more cranes going down. They're not going to be a Brookfield Place or Telus building or the Bow building, but you're going to see smaller towers going up that are going to be residential only. And that's positive for the downtown.
Yeah, and Tim used to tell me back in the day. Now we've been investing for a very, very long time, but Tim used to say something like, "The Canadian dream is to have your own home and a piece of land."
Yeah,
right?
Home in a backyard.
Home in a backyard. So that always stuck with me. So if you own, and this is what we say, we just bought the worst house in Ogden, okay, this week for our clients. But it's a 50 by 120 lot. This property is already legally suited. It's just ugly. It's the ugliest house on the street, right? The landscaping's terrible, the siding, even the steps going up to this place, we're like, just put a deck on top of it, just do something to make this. And then inside, it's even uglier than I'm talking about, okay?
But with a little lipstick,
yeah,
it could be very, very livable.
Yeah, and so a property in Ogden, and we bought this, like our budget is $56,000. So we bought it, we can tell you just under 600,000, and it's already legal, so we don't have to worry about that aspect. The C train station's coming down the road, and our clients will reap the rewards. We will do a video on this because already on the same street, they're building fourplexes, eightplexes. Across the road is this massive fourplex that we just couldn't even believe the size of this thing. So buying a builder's lot or a piece of land anywhere around 600,000, even if you're at 650,000 and you can make those numbers work, anywhere in the city within the ring roads or even if you're closer to the C trains and stuff like that, even that's even better, right? But you will reap the rewards because all they can build right now, Tim, is multifamily.
Yeah.
Okay. So you need to understand that supply and demand will just it's a no-brainer. We got a graph coming up that will show you that's a no-brainer.
One other quick thing on that single family home that everybody aspired to years ago. Guess what? They're still aspiring to it. If you talk to new immigrants to Canada, they may come to Canada, they're brand new here, they're getting an apartment downtown, they're in a 2-bedroom apartment with a husband and wife and 2 kids. Guess what? When they go to work and they find out that everybody they work with in their office, they live in the suburbs, they have a starter home or a move up home, that they're going to want one too. So they may move to that rental property in the outskirts or in the within 20 minutes of downtown. It becomes the dream of people who come to Canada. So it's not just this old dream from the 60s and 70s. People come to Canada because there is that freedom to go and buy that house and live in that house. So we're seeing that every day when we're buying our clients' properties and with the tenants that they're putting in there.
Yeah.
Okay, so the next challenge that we're going to face is, guess what? Unemployment. Calgary's unemployment has been a little bit above the national average ever since COVID. Now, traditionally, Calgary was a boom and bust economy. It went how oil went. That's how Calgary's unemployment rate went. We're predicting, well, not us, the City of Calgary Economic Outlook is predicting a little bit of a rise in that economic or the unemployment rate in 2025 and into 2026 from 6.3 right now to 7, a little over 7% maybe. Now, we've always had that unemployment rate because we've had the massive in-migration. But as soon as they land here, guess what? They're unemployed. It takes them a little while to find a job. So we've had that unemployment rate that's a little higher than the Canadian national average. And it's just something that real estate investors kind of have to learn to deal with. It doesn't really affect the average landlord out there because you're looking for people who are employed.
Yeah.
But, it's something that we're going to have to keep an eye on as the year goes on and as the previous challenge, the tariffs may or may not take effect. It's just something you want to keep an eye on as a real estate investor.
Yeah, that's funny, Tim. So you know what? I got to tell you, because we have a leasing division now where our company is leasing properties for our clients. We got into this because we found out that that is holding people back from investing in real estate. They don't want to deal with tenants. They don't want, we actually love it. And it gets us out there and experiencing what is going on, what tenants like. I realized the other day that some tenants don't like shared laundries. They don't like it. I didn't know that. They don't want their clothes in another person's laundry, which I didn't know that. But at the end of the day, so if you have an extra laundry, do you need a dishwasher in a basement suite? No, you don't. But if you have more than 3 people in your basement suite, which you shouldn't, but you could have 2 people and a kid, maybe a dishwasher would get you a little bit more rent. It would. So little things like that. So it gets us out there. But I have to tell you, the quality of tenants out there, like we've been doing this for 20 years, Tim, over 20 years, for 25 years. The quality of tenants is exceptional. Like I'm like, what do you do? You're in IT. Why? Well, we just moved here from India. I'm like, well, you can rent my place, right? And they send the rent and then they send a text like, did you get the rent? I'm like, you don't have to text me. If I don't get the rent, I will tell you I didn't get the rent, right? So the tenants are exceptional. And so what I'm trying to say is there's never been a better time to hold out and select good tenants.
Yeah. Okay, so the next thing, what we want our investors to keep an eye on is these economic indicators that are going to affect or may affect the rental market in 2025 and beyond. GDP growth, we've gone over that. It's higher than the Canadian average at almost 3%, which is great news. Unemployment rate, yes, we got to keep an eye on that. We just talked about that. Inflation, that's another thing we got to keep an eye on. One thing with this new prime minister coming in, he has mentioned that he's going to do a lot more deficit spending than even Trudeau did, at least to start. Now, we've all learned in the past that when you spend all this money, when the country borrows all this money and spends it, guess what? That drives up inflation because you're flooding the economy with all kinds of dollars. Right now, we're at 2.5% or 2.6, and we want to keep it under that 3% rate. But if our current government decides to turn on the printing presses, we may see that go up again. If that goes up again, it'll drive rents a bit, but it'll also drive a lot of people down into the lower priced rental places because they can't afford the higher rents.
Yeah.
So that's the thing to keep an eye on. Watch out what the new government does with their policies. If it starts to really drive that inflation rate up, you may have to adjust your rents to stay afloat with it. The housing market, there is going to be more building going on in Calgary to try and bring us into more of a balanced market. In the past few years, we've had way more demand, not enough supply. Our building industry and the developers have been going full out building new product, whether it's purpose-built rental buildings, whether it's new homes, whether it's new apartments. Guess what? Our building industry can move fast, and we've seen that. So it's another thing to keep an eye on. We don't want supply to outstretch our demand, which I don't think it will. Our developers have learned from the past. When the oil price gets jolted way down, they're stuck with supply, or when the worldwide economic slump hit in 2008, 2009, they were stuck with oversupply.
Yeah, what's funny about what Tim's saying is we were talking to a developer at the peak of the rental rates a year ago, about a year and 2 months ago, I would say. And one of the developers said, Tim, we can fix this problem really quickly. And we didn't really understand what he meant. And now we have 8,000 rental units. So now in just under or just over a year, the developers, and you can go to any community, they're putting in, the 4-story walk-ups or even 5-story, 6 stories now, stick frame, right? And so they fixed that problem. When he said they could fix that problem pretty quickly, they really can.
Yeah, it didn't take them long to turn it around. Where there's a shortage of rental properties. Guess what? Every building that you start, when it's got 200 or 300 units in it, that's 200 or 300 units that flood the market.
Yeah.
And like Azad said, we had 8,000 flood the market.
Yeah. So you just keep an eye on that. And so same thing with downtown. If we know more high rises are coming, you know what, the downtown condo market might be soft for a little bit. So you've got to realize you got to really time that,
Yeah.
right? That's what goes up and down. But if we're buying a condo, for example, we would not be in a high-rise community. We would be in a low-rise community, like either Kensington or Lower Mount Royal or even Marda Loop. And Marda Loop has a lot of density. And then we're in Bridgeland. We just did
Bridgeland,
I got a
Inglewood.
video that's
Yeah.
coming out actually 2 days on a video in Bridgeland. So you'll see what not to buy, what kind of condo not to buy in Bridgeland.
Yeah.
I hope I don't get in trouble for that one. But yeah, okay.
Okay, so the last thing we're going to talk about, what we think is going to affect prices in 2025 is affordability. We dug through the stats today from the Toronto Real Estate Board, the Greater Lower Mainland Real Estate Board, which is Vancouver proper, or Greater Vancouver, sorry. And if you look at these percentages and the actual prices, the average prices that we have dug up, these are today, these are current as of today. So Calgary's average home price in year to date so far 2025 is $627,000. That's the average price of all property types. So you're talking condos all the way up to single family homes. That's gone up 6.22% year over year from April of last year. That's massive. Our prices are very, very low compared to the larger centers in Canada. You look at the bottom of this here, look at the average price for Toronto and the average price for Vancouver, they're still over $1 million, but they're dropping. Toronto's average price has dropped 2.5% this year. Vancouver's price has dropped almost 6% this year. So that's the average. Even, the high-end properties have gone down. Even the mid-range properties have gone down, and all the condos that are just sitting there, they've been built over the last few years, they're sitting there empty, their prices have dropped as well.
Yeah, and historically, Tim, what is the percentage that historically that Calgary's average price, not in the last, say, 5-6 years, but when we got into this market, historically, we were roughly 30% off their price range, right? Between Toronto and Vancouver.
Yeah, even back in 2000 when we started investing, Calgary's average price was probably 210.
Yeah.
Toronto's average price was about 220.
Yeah, roll.
10 years after that, Calgary's average price was 400. Toronto's average price was 450.
Yeah.
And then you look at the spread now, they're twice the price.
So you guys work out the number on 1.15. That would be the average of those two big cities. And then take away 30% of that. Tim and I, we've always said our average, we haven't moved the goalposts over the years, but when our average was sitting at 450, we were telling everyone it should be 650. We're not even at 650 yet, but we feel, and we don't know, okay, we don't have a crystal ball, but we feel the average should be around the 800 range in Calgary. When are we going to get there? We don't know, but we know that if you look historically, and Tim's got a great slide from next coming up, but historically, we know that it's going to get there. And we have to tell you, we only run our numbers at 3.5%. And the reason why we run our numbers at 3.5%, it's something like the 70-year average for Calgary. But the last 10 years, Tim, it's been more like 6%.
Yeah, even though this is the last 20 years, it's around 6 to 8%.
Yeah.
So, and you can
you
see the red parts here. Here's the financial crisis in 08, 09. Here's the oil price drop in 2015. And then here's COVID, and the price went down 3 years in a row.
Yeah.
So, but if you look at the trend, the upward trend over the last 25 years, Calgary is always appreciating. As real estate investors, yeah, you may have to take those 1 or 2 years of the drops. Are we going to see one this year? No. Are we going to see one next year? Depends on what happens, worldwide. It depends on the tariffs. It depends on the policies of the new government. We don't know, but we know Calgary as a whole, it trends up, and it has trended up since we started.
Yeah, and what's funny, some people look at this graph and say, well, I missed the boat. You haven't missed the boat, okay? Like, even if you're starting today, we had people start today. They're buying cash flowing properties today, right? So you can buy. It's all about making sure that you can continue living your lifestyle. I mean, when you start off, I didn't do this, Tim. You should put your money into investments and help it grow. And I just spent money how I spent money. But what I'm trying to say is, you don't want to ruin your lifestyle. You want to get a good investment, and you want that to turn around and fund your lifestyle.
Yeah.
Okay. And when you look at this graph, like we were buying multiple properties, I could tell you.
In '07, we bought a ton of properties
Yeah.
because guess what? The market was booming. Everyone was buying. We were buying properties. Guess what happened the next 2 years?
Yeah. So we bought most of our properties at the peak back then. And everyone's like, "Oh, you guys are idiots," and we're like, "No, we're not." And it just proved. And I've still got some of those properties from back then. So at the end of the day, it's all about getting in the market, being with the right investment focused people. And we always say this, like I used to joke back in the early days when we used to do seminars in person. I used to tell people, we used to have family dinners like for Easter and Christmas and stuff. And I used to tell this story. We would have family come over that we don't really hang out with. Their family, but extended family. But because it's a special event, that family, they come over. And one of my wife's family members said, "Oh, I heard you owned a few rental properties," and I was so embarrassed. I didn't even want to talk about it. Like I really was uncomfortable with the whole conversation. It made me realize, that you have to be, and I hate bragging or anything like that. Don't get me wrong. I love to have a good time, but I don't brag at all. But you need to be around like-minded people that understand this and can help you through the ups and downs. I mean, some people complain about leaky toilets and stuff like that, and at the end of the day, I smile about that stuff just because you look at this graph and you own 1, 2, 3, 4, 5 of these properties, you're set, you're done. And the best thing about this, even if this market didn't go up over the 20 years and you bought in 2004 for 200,000 each property and you bought 5 properties, those properties would be nearly paid off. And I can tell you, I've seen a lot of people's pensions and RSPs because they come in here and we borrow against their RSPs to buy, Tim, more investment properties with their RSPs. That's a great way to get a deposit, by the way. But at the end of the day, they would have more money than most of those people, Tim, just holding on to that real estate.
Yeah,
and cash flowing too.
And that the negative comments you get being a landlord. I was talking to one of my kids the other day, and he's a relatively new real estate investor. He's got 2 suite of properties. He hasn't owned them very long, probably less than 3 years.
2 legal.
Yeah, they're both legal. He's done a lot of work to them. But he says when he goes out with his friends, they're all in their 20s. And they bug him about, "Oh, you're just a slumlord," and stuff like that. But there they are renting an apartment. Some of them are reaching an age where they're getting married. They're renting an apartment, and yet my son's got 2 rental properties, and over the last 3 years, he's probably made 200,000 to 300,000 on each property. Yeah. So he said he would just smile and not say anything when they're calling him a slumlord. And that's the negative comments that you're going to get as a landlord. But guess what? You're getting way ahead, way faster than most people out there.
Yeah, and all he did was take advice, right? Take the advice, and he didn't buy great properties. And I tell the story, my first properties, Tim's been in them. Like Tim actually has been in some of my rental properties back in the day. Okay, I don't own these properties anymore. But he would laugh. Like there's one property in Ogden on 18th Street. I went past it today.
I saw that one.
And the retaining wall's falling over at the front. So I'm like, it's a yellow bungalow on 18th Street.
18th Street.
Going up in Linwood there, Ogden. Anyway, that basement, it had orange carpet, it had one of those bars. The bars?
It was 1962 in the whole house.
It was terrible, right? But guess what? That property, I think I bought it for 165 and I bought it for 165, I sold it for 365 when I offloaded it. So, you don't have to have the beauties to start off with. I'll just tell you that. You just have to get in the market, understand what you're doing, and upgrade your portfolio over time. Yeah.
So that concludes our seminar for this week. What we're going to talk about just is a few things briefly. We hope you got a ton of information out of this seminar because we are very bullish on how Calgary is going to do in 2025. So despite what the results of the election, we think Calgary real estate is still on the up and up all year long.
Yeah, and we wanted to put this out there tonight. I know it's one of those topics that people don't want to talk about because we just had elections and but you need to understand this. Your joint venture partners or your people thinking of investing in real estate, you are the experts out there. That's why we do this. to teach you what is really going on. Okay, if you are new to us, you can download our free investment book. I'll put it in the chat here. It's a must read for all investors. We wrote this during COVID, and it goes through the core fundamentals of investing in real estate, like property cycles. It goes through what kind of financing you need to get. It goes through simple things on selecting properties, the right properties, how to cash flow. These things you need to know, okay? It's a must read, it's a quick read, and it's fun.
And it's free.
And it's free.
Just download it.
Just download it and read it. The next is, it will cost you 20 bucks. We just had to order a whole new bunch because we just sold out. So it's in reprint mode right now. This is called Fearless Real Estate. Those little boxes you see there, they're our clients. We wanted to put something out there, and we've just promised to add to this book. So we've got some great stories of some of our investors that we want to showcase their stories as well, just like newer stories too. And the best thing is, on the next print, we can add a whole bunch more stories. So the reason why we did this, we wanted to show you what normal people are doing, what all different, and we work with all different people, single mothers. We do work with doctors and pilots, but we work with just average people that are just getting ahead. I mean, Tim and I were two average guys, and we got ahead. We use real estate, and we share our story in here, which is really, really cool.
And the reason for the pictures on the front of the clients is because it is client focused. It's about them. It's not about what we did in our investing careers. It's about how our clients are having success and how they're making a killing in real estate using all the different real estate investment strategies out there. It's all in there. So it's a great read. If you haven't read it, just grab it off the website and have a read. The next thing is our Calgary Real Estate Wealth membership. It's $97 a month or $9.97 all up front. It goes through everything you need to do about real estate investing. We are revamping it to give it a better delivery method. So, even if you buy it now, you will get the revamped version once it's out.
You get the new version is going to be unbelievable on the new site. We can't wait. We're building it right now, so we're super excited. We've pumped a lot of money into this, and we're doing it to help people. Like, we're doing it. This is nothing, right? And our investors that do buy with us in the end, they get this mentorship and the revamped version. You'll be able to search properties right the whole site, and you'll be able to it'll have a mortgage calculator, so you'll be able to pick a property, look at it, run the numbers, and then watch videos on how to put the deal together, all on one system, which is going to be life-changing. The next thing is, you got to hear from some of our investors. I know you've heard a lot from us tonight. It is a lot. But you know what? Go on our Crew TV. Once again, it's free. Subscribe to it. And there's great videos on there. We do property tours. We do market updates. We do educational pieces. We do put some of these seminars on there, just so you know, not all of them, but we do put some that are relevant. Like tonight's topic was about the elections and where Calgary's heading. So that is more something that would go on something like Crew TV. And then, the best thing, Tim, they do see the client interviews and how much money they're making.
It's their words. We're not, telling our clients making up stories about how they did this, how they did that. We actually interview them, and they say, this is what I did, this is what I bought, this is how much money I expect to make. And it works.
Like this guy here, how to save money when flipping houses in the middle of Landon. He's actually contacted us last week to sell one of his properties, and we hate selling properties. We never want you to sell, okay? But he's going to take that money, pump more money into another house and increase the value, and that area is going through the roof right now, so it all makes sense. Little things like that. Okay, we hope you like tonight, and we hope you go to work tomorrow and tell your friends and family about us. We know that we are hosting another seminar in 2 weeks' time. I will not be going away and rescheduling, but I do want you guys to mark one date down. We do have a special guest 1 week later than the next seminar, which will be on the 20th, and it is Chantel. She owns an appraisal company, and this is crucial, okay? Getting the most value appraised homes for your investment properties is key for you to recycle your money and buy more real estate. That is the key part to pulling money out, and investing is just as simple as this, right? Buying property number one, making the numbers work, pulling out enough money or increasing the value of that property over time. And you can increase it by just simply sitting on it, or you can add value by doing renovations or adding a basement suite. Anyway, pulling that money out to the point where the property looks after itself and getting the max appreciation, and then taking that tax-free money, that is the key, tax-free, taking that big chunk of money, using some of it to maybe go on a vacation or lease a nice car or whatever, but taking the rest of it and putting it down on another property. Okay.
Yeah.
So she's coming on, that is on the 20th of the month. And if you think investing's for you, or you just want to hang out with Tim and myself, we are pretty cool. We hang out down here.
Well, he's cool.
Every day. I try to be cool. We hang out here every day. We're in here in the afternoons. We leave it here for our clients to pop in. Do make an appointment though. We do have people just we have one investor that just turns up. All right, let's have a chat. So anyway, we will not turn you away, but if we do have people, sometimes we can't fit you in. So we do have our boardroom here for to come down and chat if you want to progress with your investing, or you just want to know. We had one guy come in, Tim, a couple of weeks ago. He wanted to put a basement suite into his own home, and we actually told him not to do it.
Yeah.
So we will give you our honest opinion, and that will help you financially.
Yeah. And if you're new to investing in real estate, new to Calgary Real Estate Wealth, and you want to do a one-on-one meeting with us, by all means, put our contact info down. Give us an email. We'll set something up so that we can meet with you, find out where you are right now, where you want to go, what your goals are, and then we can plot a course to get you there using real estate as that investment vehicle.
Yeah.
Okay, so that's our seminar for today. Thank you very much for joining us. We will see you in 2 weeks, and hopefully the Oilers win tonight.
Yeah.
You don't often hear us cheering for the Oilers.
I know, but it's good hockey. Okay, see you later.